Welcome to the CFD weekly overview of the global financial markets. The euro weakened against the dollar, falling to a two-month low on Tuesday. The European Commission opposed Italy's budget plans. Worries about Italy's spending have fed doubts about the ECB plan to raise interest rates next summer. Its monetary policy meeting is scheduled for Thursday. The British pound weakened sharply against the dollar, as no agreement was reached during the EU summit in Brussels last week. The Irish border issue and disagreements within Britain's ruling Conservatives convinced investors that further political turmoil might be expected. The Japanese yen retreated against the dollar last week, but pushed higher this week on safe haven demand. Overall, the US dollar rose last week on heightened stock market turbulences, rising treasury yields, and unfavorable news from Europe. The Turkish lira further strengthened against the dollar, but reversed on Tuesday when Turkish nationalists promised to pull out from an alliance with Erdogan, threatening the stability of the government. US stocks fell sharply last week in spite of very sound corporate earnings releases, as investor worries concerning global trade tensions and prospects for economic growth continued. With more than 15% of companies reporting earnings, 83% have topped analysts' estimates, according to FactSet. With stocks volatile and geopolitical events affecting markets, gold prices rose sharply last week, hitting their highest level since mid-July on Tuesday. Oil prices fell last week on the build-up of US inventories and a rising number of drills. The EIA released its forecast that US shale oil production will increase by 98,000 barrels per day in November, and also raised its forecast for 2019 US oil production by 300,000 barrels per day to 11.8 million barrels per day. You've been watching the CFD Weekly overview of the global financial markets.